Hey there, credit champions. Welcome back to Money Moves Made Easy TV, your go-to place for personal finance tips and tricks. Today, we're diving into the world of credit scores, a topic that can feel mysterious and intimidating, but it doesn't have to be. Your credit score is more than just a number. It's a gateway to financial opportunities, or, if neglected, a barrier to them. Understanding how credit scores work and how they're calculated is crucial for building a strong financial foundation. Whether you're aiming to buy a home, secure a loan, or get better rates on credit cards, boosting your credit score can open doors and save you money in the long run. We'll break down what makes up your credit score and offer actionable tips to improve it, empowering you to achieve greater financial security and flexibility. If you want to understand how credit scores work and learn some practical tips to boost yours, stick around, because this video is for you. Let's demystify credit scores. Before we move on to the video, don't forget to like and subscribe to the channel to see more finance videos like this. What is a credit score? So, what exactly is a credit score? In simple terms, a credit score is a number between 300 and 1,000 representing your creditworthiness. That is, how likely you are to repay borrowed money. A higher score means you're a lower risk to lenders, while a lower score may make it harder to qualify for loans or credit cards with good terms. Why is your credit score important? Your credit score matters because it affects a lot of areas in your life. It can determine whether you qualify for a mortgage, what interest rates you get on loans, your credit card options, and sometimes even your ability to rent an apartment or land a job. A good credit score can save you thousands of dollars over time, so it's worth paying attention to. How is your credit score calculated? Let's break down how credit scores are calculated. Your credit score is based on 5 main factors. 1. Payment history. This is the most important factor and reflects whether you've paid your bills on time. 2. Credit utilization. This is the percentage of your credit limits you're using. Lower is better. 3. Length of credit history. The longer you've had credit, the better. 4. New credit. Opening too many new accounts in a short period can hurt your score. 5. Credit mix. Lenders like to see a healthy mix of credit types like credit cards, auto loans, and mortgages. Knowing these factors can help you understand which areas to focus on to improve your score. Tips to improve your credit score. Number 1. Pay your bills on time. Pay your bills on time every time. Payment history is the largest factor in your credit score, so even one late payment can have a big impact. Set reminders or use auto pay to make sure you never miss a due date. Number 2. Lower your credit utilization ratio. Keep your credit utilization below 30%. This means using less than 30% of your available credit. For example, if you have a credit limit of $10,000, aim to keep your balance under $3,000. Ideally, aim even lower to improve your score faster. Number 3. Don't close old credit accounts. Don't close old credit accounts if you don't have to. The longer your credit history, the better it is for your score. Keeping old accounts open, even if you don't use them often, can help boost your score. Number 4. Limit new credit inquiries. Avoid applying for multiple new credit accounts in a short period. Each credit inquiry can lower your score slightly, so only apply for credit when you need it. Number 5. Diversify your credit mix. Diversify your credit mix if possible. Lenders like to see a variety of credit types, so having a good mix, like a credit card, a car loan, or a mortgage, can help your score. But remember, only take on credit you can manage responsibly. Myths about credit scores. Let's bust a few common myths about credit scores. 1. The myth is that checking your credit score hurts your score. But checking your score is considered a soft inquiry and doesn't affect your score at all. 2. Carrying a balance on your credit card helps your score, but paying off your balance in full each month is the best approach. Carrying a balance only means paying interest. No extra points for that. 3. Another one is that your income affects your credit score. It's not. Your income isn't included in your credit score calculation. However, lenders may look at it separately to decide if you can repay a loan. How to check your credit score for free. Wondering where to check your credit score? You can get your score for free from various sources like Credit Karma, Experian, or even your credit card provider. You're also entitled to a free credit report from each major credit bureau once a year at annualcreditreport.com. Regularly checking your score can help you stay on track. Why improving your credit score is a long-term game. Improving your credit score doesn't happen overnight. It's a long-term game. Small, consistent actions over time, like paying on time and keeping balances low, are what will make a big difference. So, be patient and remember that every positive step counts. Here's a quick recap for you. 5 key tips to boost your credit score. 1. Pay your bills on time. 2. Keep credit utilization below 30%. 3. Don't close old accounts. 4. Limit new credit inquiries. 5. Diversify your credit mix. Follow these tips, and you'll be well on your way to a better credit score. And that's a wrap on demystifying credit scores. Remember, understanding and improving your credit score can open doors to financial freedom and save you a lot in the long run. If you found this video helpful, please give it a thumbs up, subscribe to our channel, Money Moves Made Easy TV, and let us know in the comments, what credit score tips would you like more help with? Also, you can download all related resources and guides in the description section below. Thanks for watching and happy saving.